Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another YouTube video. This is going to be your daily cryptocurrency market update. For those of you that are new around here, every single day we release a daily market update at around about 1 p.m. UK time, where we essentially try and look at where the cryptocurrency market is and potentially going in relation to the broader macroeconomic context. You cannot, and it was a big mistake that I made, ending the bull market in 2021, it ended in around about November, was I wasn't paying attention to what was going on elsewhere. I was just very bullish, and I still am today. Never lost my bullishness on the cryptocurrency market over a long-term trajectory. But in terms of navigating these markets with the macroeconomic sort of conditions, that's really what we try and do in these videos, and also look at the crypto market internally. Very wary right now in regards to Bitcoin and where it's at. I certainly wouldn't long it here. But then again, I think it's low probability either scenario, although we are looking for a potential reverse head and shoulders, which kind of confirms all the other reversal points that we've looked at from this bear market, or at least the bear market waning. But we're going to start things off with Jerome Powell's comments. Markets are all about pricing in interest rates. And have they got it right? That's the main and big question you need to ask yourself right now is, have markets got where they think interest rates are going right? And we'll find out. And what Jerome Powell said yesterday was rather telling. We are going to look at this. We're going to look at inflation. We've got the inflationary numbers coming out in under a week now, around about 6 days. It comes out on Tuesday next week. This is all going to dictate what the Fed do, where interest rate goes. And remember, markets are just trying to essentially second guess the Federal Reserve. I will show you that, it's something we looked at a lot last year. It's one reason we got out of the market, because we said, okay, the markets are moving off, interest rates going up, and we think interest rates going up. Looking at things like the Eurodollars, the 30-day Fed funds futures, we need to reallocate capital and kind of get on the side of the sort of firms that do that kind of thing. So there's a lot for us to look at. I also will pull this from cross-border capital up. Talking about inflation, we've got crude oil loading suspended after the sort of what we saw happen in Turkey. We spoke about stablecoin in the Bank of England's report yesterday, but we'll cover that towards the end of the video. Let's just start off by looking at Jerome Powell's, one of his main comments yesterday.
What we said at the meeting was that we believe that we anticipate, is what we said, that ongoing rate increases will be appropriate. And the reason is we're trying to achieve a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. And we don't think we've achieved that yet. So we said that, and now you see the labor market report, and I think, again, financial conditions are more well aligned with that than they were before. What we said at the meeting was...
So just to summarize, not that I really need to, it is very sort of brief. The Fed have a 2% target for inflation. Inflation is still, the last inflation reprint we had was 6.5. But there is a lagged effect with interest rates. So they did say they needed ongoing rate increases, and it was plural. So they're suggesting more than one. Well, markets right now, as well as the 2-year yields, which is all something that we've looked at. We predicted actually before we had the lower print that if this is the top for the 2-year yields, your rate hike, your rates are not going much above 5%. So this is what the 30-day Fed Fund futures is pricing in. Just under 5%. Okay, and you can see actually take the volume off because we don't need that on here for now. Going into the year, we had a kind of easing, potentially, and this would probably be very correlated with the 2-year yields going down, and then we've got a reassertion. So rates at one point were priced at 4.75%, so about where they are now. But bearing in mind this is over a longer term time run, so they're about spot on where they currently are. Now the Eurodollars is a bit more of a wider one. This is something we looked at. That actually saw bit of sell pressure yesterday on JP's news, but it's largely where it is. It's largely on this ledge, and actually we've been able to short and get out of a lot of the crypto spills based on this dipping down. And I don't want to go into what the Eurodollars is and explain it, but essentially all you need to know is when it goes down, it's a way for people to look at the US interest rates going up. And right now it has interest rates priced at over 5%, and we're at 5.75 at the moment for the Fed funds rate. So the real question is, and this is why this is Bitcoin, by the way, and remember this is a representation of rates. You can look at the S&P. It's all stuff we've done. I don't want to continue to do it. But it's very interesting that we've got yields climbing again. Certainly the 10-year, because the 10-year is what basically moves in tandem with the dollar. So we've seen the dollar strength, which we've said is a big part of this story, is the dollar strength. We did actually predict this dollar strength. Well, we gave one or two scenarios. You've got strength here and then it wanes, or you got strength further down and then it wanes. The dollar could be done. The dollar's basically, it's a very obvious level that this was going to bounce at. Of course, forgive me guys, my face is right in the way there. So it's all about macroeconomics and markets moving with them. And you can see this because actually, one thing that I spoke to my patrons about this morning was Bitcoin is very much, and they're all in this risk category, and risk kind of came into flavor as markets started to go, okay, well, just like we did at the start of the year, rates are coming to an end, so we can start pricing in cuts. Markets front ran hikes, they'll front run cuts. It's all a big game of liquidity. We can talk about liquidity in just a second. But if you look at what the Nasdaq's doing, you've got this kind of, first of all, everything is largely breaking out, right? So you've broken out of this resistance. S&P, similar thing, just a scenario we're looking for, but just to draw it again, broken out of this resistance. Bitcoin potentially was in a sort of macro falling wedge that we looked at. It's in a falling wedge actually against the likes of the S&P and gold. So it's a breakout. The whole risk sector's moving together as to be expected. But it's moving off of interest rate pricing, right? And this is why, yesterday you had this on Jerome Powell speaking. You see this kind of confusion candle? Up leg and then retraces the whole thing and then goes on to put in direction. Often, actually, these will come, you'll get something like that. So you're at this kind of ledge for Bitcoin right now. Not a fan of this. People are bidding this up. We could do a whole volume sort of profile on this in terms of looking at where the bulk of the volume occurs and who's in charge of this. We did it in yesterday's video. But everything's kind of broken out. And I think, for me personally, providing inflation comes down lower again, even if we had a slightly higher inflation number, that might spook markets, but I don't think it'd be enough to sort of deter them from the path that they're now on. Okay, we've got lots of other external reasons like China reopening, the liquidity that's going to bring to the party, this kind of macro liquidity cycle all going on. I think markets are set for continuation, guys, until we get whatever it is the yield curve's predicting play out. And we've actually gave you a scenario in yesterday's video where we said, if we want the yield curve to play out, we're doing a very similar thing to what we did here, This could be what we have in terms of the yield curve playing out. Something like this. This could be a yield curve playing out and we get back up towards these 30k levels. I'm looking for 30k Bitcoin at this point. I think it's very, very achievable. And then maybe you get the sort of the down leg and then it sets up for more continuation possibly. So lots of scenarios. We're trying to scenario forecast. The main takeaway here, Jerome Powell's points were that, they want to keep disinflation's begun, but they don't want to take their foot off the gas too soon, and they expect to do more rate hikes. And hikes was plural, so maybe markets are slightly underpricing, but we don't think, providing that the 2-year yield has topped here, that you're going to get. Let's put the Fed funds up so I can show you exactly what I'm talking about. 2-year yield leads Fed's funds. Always has done. They always top at the same point and come down at the same point pretty much. So providing that this doesn't reassert and go on and put in a new high and you get something like, it comes up to, 5+%, and then markets would probably need to reprice on the back end of that. You'd get a strong dollar on the back end of that. You'd also get a deeper yield curve inversion though, which would be interesting. Here's the thing. The crash doesn't happen until the inversion, until it's uninverted. So we're not predicting a crash now. We're just predicting that markets are just moving with the sort of broader economic context, which actually doesn't look that bad now. But of course, it's going to be an ongoing situation that we're going to have to monitor consistently. Of course, inflation's a big one. We've got inflation stats coming out on Tuesday. Let's get rid of all this messy charts. But looking at a lot of your inflationary sort of data, this is oil. It's coming down to this kind of relative low point. Wheat, we've seen no sort of spike up really from. What we've got, natural gas. Oof, boy. Not only is this pre-war, this is sort of coming into pre-pandemic. It's very interesting. So that's really all I've got for you guys. We will cover some more crypto news. I'm going to, and let me know in the comment section if you think this is a good idea. Every single day, straight first thing in the morning, I'm going to do a 24 hours that cover all the main news articles over the past 24 hours within the crypto space. We're going to do that every day. We're going to do a daily cryptocurrency market update, and then in the evening, we'll cover our individual cryptos, whether it be Algorand, Cardano, Polkadot, Cosmos, and the exciting things that are going on within those ecosystems. So all I've got for you in this video, guys. If you enjoyed the content, like, always appreciate it. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a wonderful Wednesday, guys. See you in the next one.